A big problem that many traders face, especially when they're first starting out, is getting stopped out of trades too early. We try to do too much. There's so many rules and signals, and it's easy to get them confused. And it's in the moment, it doesn't feel like we're necessarily even confusing things, but we end up getting stopped out of a trade too early, and then a couple of days later, we see that trade continue to move higher without us, and that creates a lot of frustration. So in this video, I want to help share with you how not to get stopped out of trades too early. So this is a question that came up in our Chart Your Trade family Facebook group. If you're not already a member of that group, check it out. I will include a link down in the description below. But definitely check that out. And a question that came in from that group had to do with being stopped out of trades too early. And so this is something that would happen to me all the time. And the reason why is because, like I alluded to earlier, I was trying to do way too much with too many different signals. And I was more concerned, not like, well, we all want to make money in the market. That's why that we're even trading, right? Like, we're not trading to lose, but we want to grow our accounts and be able to do all the things that we want to do as a result of growing our accounts. And trading is fun, but we want to be able to win. So what I ended up doing when I had first started out, I wanted to try to get out at the right time. And to me, that meant being right about when I would get out. So if I bought the stock at certain price and I saw it start to work its way higher and then I saw it start to roll over, then I would start to question, well, is this a signal? It's breaking below some moving averages, but on a longer term basis, maybe it's still in this uptrend. If I switch from the daily chart to the weekly chart, now it looks okay. What should I do? And there were so many times where something would start to break down on a daily chart and I would look at the weekly chart and it would be fine. And then a few days later or a week or two later, it actually did fall over. And then I would start to think to myself, if only I had exited when I first saw that signal. I was right then, but I didn't do anything about it. And now I ended up sitting with this trade too long, and now I'm sitting at a loss. And so from there, I would take that and I journal that down. And this is a process that took a very long time. I'm talking several years. And then I would go back and I would say, okay, I'm not going to let that happen again. Let me go back to the next trade. And when I start to see that shorter term move, then I'll exit and the market's not going to roll over, and that'll be much better for me. Well, then what started to happen, of course, is that I got that shorter term signal and I started to exit, right? And so great for me. Now it's not going to take that away from me. But then what happened, of course, is that it didn't roll all the way back down. It pulled back a little bit, and then it started to continue its way higher, and it did not give another entry point along the way. And so here I am sitting with my 10% gain, 15% gain, what have you, whereas if I held on, I could have had a 50% gain. How many times has this happened? It's happened to me more times than I can even count. But part of what we need to understand, and part of what I came to understand, is that we need to have separate rules and signals for each type of trade that we're going to have. And it's important to lay out our intentions for each trade as we are conceiving of the trade. So what do I mean? When we first put on the trade, we need to figure out, is this going to be a shorter term trade? Is it going to be intermediate term? Is it going to be longer term? Now, after we initiate the trade, if a stock does end up rolling over or it gives us some kind of signal that takes us out on a short-term basis, on an intermediate-term basis, or on a longer-term basis, and if that happens right away, then that's okay. But we need to have specific intentions for that trade because we know how we should be managing it. If on that shorter term trade, we are getting a shorter term signal to exit, okay, fine. If on that longer term trade, we're getting a shorter term signal to exit, then that's not something that we should be considering. It's something that should be ignored because it doesn't fit in the scope of that trade. And so segregating the rules is something that really ended up helping me. So there's a tool that I created a while ago that I think can really help you figure out what your intentions are and help you lay it out for every single trade. And this tool is a trading log template that I developed and is available on ChartYourTrade. I'll include the link on how to download it somewhere up here. I'll also include the link to download it down in the description as well. I encourage you to go and check that tool out. It's for free. And what it allows you to do is think through each of the steps of the trade. So, not just identifying where you're going to get in, where you're going to get out, how much you're going to risk, but what your intentions for the trade are, what time frame you're trading this on, why you're getting into this trade, what a neutral observer would think about this trade, and also what the person on the other side of the trade might be thinking as well, and what sort of feelings do those have? Like putting yourself in somebody else's shoes and trying to think about what they're thinking when they're selling you that position. So the trading log template helps you think through all those things, and I call it a template because I want you to be able to take that framework, and then if a certain question doesn't really fit you, then eliminate it, put something else in there. If there's something else that you feel is important that wasn't included, then put that in as well. Make it your own. And that's how you're going to learn how to be successful in the market that much quicker. So let me know down in the comment section below what you think about this trading log template. And let me know if you downloaded it. Let me know what you think about it. If you do like it, let me know what kinds of questions you get the most out of in there. And let me know what else you would add into it as well. And then we can improve it for future members. Also, make sure that you subscribe to this Facebook group if you haven't already done so already. It's called Chart Your Trade Family. I'll include a link down in the description below. It's a fantastic group. It's growing every single day. Thanks again for watching. I truly, truly appreciate it. And like always, if you have questions, leave them down below and click that thumbs up button. That's always going to help us. And subscribe to the channel so that we get every single update. That's a lot to do. I really appreciate it. Thank you for watching, and I'll see you again in the next video. Take care and have a great day.